Hello, Warriors. How's everyone doing today? Hugo, how are you? Hi, LZ. How are you? Arena, Marco, Paul, Hugo. I'm a doctor now, huh? Okay. Alexander. So, wow is all I could say about yesterday with the dollar. Okay. So, I was looking for dollar strength to fade. Hello, Gorgum. Ren, how are you? Laura? And did not expect this much dollar strength. I'll tell you who did. Well, didn't expect it, but prepped someone. Thank you, Forex Gal. Good morning. Nice to meet you, Christopher. Someone who prepped you with areas that were going to get him long the dollar is Blake Morrow. Okay. So Blake gave you areas in gold that would tell him to be long dollars, was 1845. Okay. He also talked about the potential for higher yields. Um, he felt there could be an important inflection point in monetary policy. Okay. Congratulations, Paul. And the only thing that survived, at least for now, but not by much, were the S&Ps. Okay. And they take out this 42 level. You have a 50-day moving average there. A lot of things. It's already a reversal week. And Blake also prepared you, I believe it was Euro Yen. Anyway, besides prepping you in face,
Dude, you can't. You mentioned the euro yen. I'm
you
so
got out.
irritated.
Oh,
I am still short. I forgot to adjust my pattern and play limit, and so I did it this morning. I told everybody in the chat room. I can't believe I didn't adjust that. It's when you're trading.
yeah, you get
Sometimes,
caught up in the heat of the moment.
yeah, I forget to
It's
make
hard to have a
adjustments.
job sometimes and concentrate on your trading.
Yeah, I
Huh?
mean,
You know what I mean?
everybody that's ever most people that are, especially in the chat room, they know I'm short from like 133.50 actually. So, shoot.
You did a
Um,
great job prepping the community yesterday, Blake. That's why, I wanted to bring it up, and I know you
thank
gave more specific entries in on the morning edge, and also you had great pattern and plays working going into it. And here you go. Look, Blake, all Blake, all
well,
win.
yeah, and you know what? I think there's more to come here. I think right now what you're seeing, and I'll let you.
I'm done. Go
Yeah, I'll
ahead,
let you.
bro, because I know you. I think you have Grega coming in here in a little bit, right?
Greg is jumping in, but I think there's a lot actually to come here with higher volatility, and I think like you look at the well, I'll just take over really quick, Dale,
Okay.
and thank
Go
you all
ahead,
for all
buddy.
the kind words. It was
Well, I mean, I'm not patronizing. I'm just saying that anyone that listened to you should not have been surprised once those levels that you brought up were violated. So, I mean, you can't prepare people any better for what was, maybe a seminal event in monetary policy. Great job, Blake.
well, thank you. We actually had to react yesterday to the FOMC. I mean, the dollar Canadian, you could argue was already
Yeah.
suggesting that the dollar was going to make the move. I mean, it was so one of the things that I did yesterday during the daily roundup is we got long dollar Canadian just before the Fed. Right here, as we dipped down below this support right here, everybody in the chat room, I'm like, okay, I'm buying the dollar Canadian. My long was at 121.59, I think. And then when the Fed made their initial announcement, I already had my stops at break even. I said the goal is to get, I locked in half my profits up 13, then, moved the stop up to break even just ahead of the Fed. And that was my only dollar exposure. And then, then we ended up buying dollars all over the board, but you had to react more to it because look, I mean, we've been disappointed a lot with the Fed. The Fed's, constantly just brushed off the economic data. And, when you listen to the Fed chairman yesterday and you hear his acknowledgement of the strong labor markets, that's, that's pretty telling. So the market reacted and he tried to smooth everything over and BS his way through everything, which you have to imagine the Fed, they have to do what they have to do, try not to get reactions out of the market. They know they're going to get reactions out of the market, but they have to try to subdue that as much as possible, try to keep some price stability. And so it was near impossible for them to do. I mean, all of us just read through their crap and we just, I'm long a lot of US dollar Norwegian krona. I'm long a lot of US dollar Mexican peso. I'm playing the, shorted the Aussie dollar last night following the jobs report. I was trying to get a short off at 76.50. Everybody in the chat room knew I had an order there. I was in the middle of working with Pepperstone last night, doing some run throughs of their new program that we're doing with them. And as we spiked up to 45, I sold some at 40 and I was going to sell some more at 50, 55 if we got there. We just never got there. So I've been short the Aussie since last night. And everybody in the chat room knew I was, looking to sell right here. But yeah, the dollar's got a ways to recover. And if you look at the dollar index now, I mean, we're above the 50% retracement. And we can recover all the way, in my opinion, we can recover all the way to 92.5. I mean, this keeps us in a bearish wedge formation. So if you guys are dollar bears, try being short up here, at 92.50. We are above the 200-day moving average at the moment. And, I could see that the dollar, could actually pick up a little bit more steam moving forward, but we're not going to go straight up either. So if you're out there booking some profits, it makes a lot of sense. But I think that as stocks start to show some weakness, you're going to see some of these currencies like the chart of the day yesterday was the New Zealand yen. Why is that so important? Well, we broke this trend line. You can see it right here, guys. If you don't know where to find the chart of the day, I do this, 4 times a week for you guys, and you don't have to be a paying subscriber to get this information. So New Zealand yen, it broke this massive trend line. Not only the false breakout triangle reversal, but also broke a massive trend line. I think we're going to go see the 200-day moving average again. That's, another 70 pips away from where we're currently at. So, we've got, currencies like this, Canadian yen, which I'm short. Okay, you can see it finally breaking down. We had big divergence. Euro yen, I'm short, coming out of an ascending wedge. I think we've got, we're at the 50-day moving average. We got further to go. Look, all we need right now is equities to have a little bit of realization today. Like, oh crap, Fed might actually taper bond purchases. That doesn't mean the Fed's going to be raising rates. They're going to be tapering bond purchases, but less liquidity means, typically softer asset prices. So once the market starts going, oh, wait a second, we're going to see, less liquidity coming in the markets. Well, yeah, S&P is probably going to come down a little bit. NASDAQ's probably going to be even more aggressive to the downside. We're going to see, maybe a little summer swoon here. And we, you know, like I could very easily see the NASDAQ, you know, doing a little 5 to 10% correction.
That's
Right?
a 3 drive, Blake.
1, 2, oop, false breakout. Right?
Yeah.
Look at you, Dale.
And
So
a
I mean,
3.
look, if you see a little bit of a sell-off in the S&Ps, here's your ascending wedge here. You know, you can see I have all sorts of alarms set up right here at 141.70, 141.50. You know, we start breaking some of these levels. Now that's when you start looking at some of these yen pairs and saying, holy crap, they've got a long way to come down. I mean, look at the Canadian yen. We've gone from let's just assume that this is the high, and I'm just going to make that assumption, which doesn't mean it is. I'm just going to make the assumption. 38% retracement comes in at 84.50. That's the previous high from February of 2020. That currently is 500 pips away from where we're at. People forget because we have had crap for volatility over the last, 8 to 12 months in currencies. People forget that 500 pips can happen in a heartbeat in the currency market. Did you remember we used to move 500 pips over the course of a couple of months?
Yeah.
Sometimes in a month. Stelios, yeah. Steve, Dale, you guys remember? The currencies used to do that.
Of course.
That's why we started the business, right?
We had interest rate differentials back then.
Yeah,
right?
and look, we might have interest rate differentials again. That's like the topic of conversation I was having with Chris Weston of Pepperstone Securities last night. I'm like, look, man, this is good for us. It ain't great for investors, but for traders, we're going to have interest rate expectations moving, right? Doesn't mean that they're really going to move a whole lot, right, Steve? I know Steve's like in the camp of, central banks are going to be at 0 for the next 100 years. But I mean, hey, it doesn't mean that it won't change people's ideas that we might actually get a lift off from time to time.
Steve?
Hey guys, I'm not sure if Steve is around.
Okay. Well, you know what, Grega? We're just so happy that you're here.
What did I miss? I just logged in.
Look, he is here.
Swallowed.
What did I miss? I just logged in. I was bringing Jason home.
We were just bad mouthing you. Don't worry.
We were just talking crap about you, Steve. So
nothing
new
has changed. Nothing new.
No, I want to let Grega come take over here in a second. And guys, Grega Horvat, he did our week ahead video. Was it this last week, Grega?
Yeah, it was.
Yeah, it was this last week. You did our week ahead video, so he gets to do a little bit of a follow-up following the FOMC. Really quick, Manish said, I'm not a subscriber, but can you explain how you get 2 axes left and right on a chart on TradingView? 2 axes.
Yeah.
Yeah. If you add another instrument, then it gives you an access of the other instrument.
Got it. Yeah, this here's the S&P, and that's why it's there. Then I just hide it. That's it right there. Okay, I see what you're talking about. So I hope that helps. But Grega, I'm going to let you catch everybody up on your thoughts about the post FOMC move. But Steve, what we were saying though, jokes aside, is that we're seeing a little bit of higher volatility in the currency market, and that's a good thing. And the reason why that is because you have interest rate expectations that are shifting. Not necessarily, it doesn't mean that the Fed or any other central bank is actually going to ever raise rates, or if they do, you'll have the markets react probably negatively as the Fed tries to inch up a 1/4 basis point or 1/2 basis point, maybe a year or two from now. But what that means is, and this is the point that Stelios and I were trying to make, is that interest rate differentials and expectations that create those differentials are now shifting, and that creates, 500 pip moves in the Canadian yen. And and the point I was trying to make is we haven't seen a 500 pip move in a currency pair in a while, but it's not uncommon, and they are coming. So as I've mentioned for the last, several months, as we came into 2021, this year is going to be the year, and moving forward, the volatility is going to be picking up in currencies. So you guys are in the right spot. So glad to have you all here. And that was the point I was trying to make, Steve. But Steve, Stelios, and I will have a lot to say on our Forex Analytics customer only morning edge webinar in 1 hour. But Grega, I'm going to let you take over so you can.
FACO.
Yes, finally we have a lot of things to talk about, indeed.
Finally, we do. All right, Grega, it's all yours, man.
Yeah.
And good to have you here. And thanks for being here, by the way. And thanks for the week ahead video that you provided for free for everybody to watch. It's awesome.
And thanks for the nurses' recommendations.
You need anyone?
Yeah.
Yeah. Okay, so we have seen a very nice dollar strength, and today I want to bring on this silver chart, where we also covered it in week ahead video and also in some of the webinars in the past. And either we completed this flat correction and we could continue higher after this pullback, or maybe this whole price action will be a triangle where WAVE can actually reach the lower side of this pattern. So there is still room for more weakness, and with the dollar strength that we are currently seeing, I would not be surprised to actually see silver moving even lower. With that being said, I was going through a lot of dollar pairs and was trying to find what the best pattern. And actually what I really love here is dollar against Swiss franc. We are rallying away from this 78.6%, and looks like that we are acting very, very impulsively here. So I will keep an eye on those pullbacks. Probably in the next week, we are probably here, maybe just slowing down for wave 4 pullback. Wave 3 is a temporary resistance here at 91.65. Now the first support, very interesting one, would be at 90.90 level, which is also the swing high here back from mid-May. So I think that this could provide quite nice opportunities on the long side while the market is trading here above this invalidation level. So with the current sentiment, I think that dollar Swiss is definitely worth to keep an eye on. Also, looking at Aussie dollar, me and Steve were discussing about Aussie dollar in last week, I believe. And we've been covering potential triangle here for a wave 4, or maybe even a deeper flat correction. For now, it's still a little bit too soon to say what will happen, but I'm afraid that we will actually see more weakness here for a wave C. And
yeah, I don't know how you've drawn it, but where I have drawn the symmetrical triangle trend line support, we're actually just bridging through it, just on the day.
Yeah, you probably connected the previous swing lows.
Yeah.
So, I mean, those currencies are probably not the best, based on a pattern that I'm looking, are not having the best wave structure. And dollar Swiss is probably the one that we should look for. Also, if we look at dollar yen here, I'm wondering what will happen around 111 level. We are here testing this previous swing high, and I'm still looking for potential resumption higher back to this pre-COVID crisis levels here from last year, February, which is around 112 levels. So I'm thinking about more upside here, especially if yields will continue to trade higher. So these are probably two pairs that I would be tracking very closely, of course. based on the short-term structures, there are even more pairs that could see more dollar strength. Here is, for example, dollar Canadian, which is maybe trading in a wave 4, but for now this is a very sharp move, so it could have room for more upside.
It is.
Yeah.
Same with USD NOK. Actually, yesterday I closed after months my USD NOK short after the Fed, because USD NOK broke through the 842 resistance area as well, and it looks to me like it might have more room to run.
Yeah, and looking at this, even if that would be like an extended wave C, but I think that it can prove to be wave 3 actually. But in both cases, I think that there is room for more upside after that wave 4 pullback. So for now, I just think that we should respect what the dollar is doing, and if you are a short-term trader, I think that those pullbacks could be quite interesting. Also, let's take a look on crude oil. Now, crude oil did not move much actually, but still you have these 5 waves up from May lows. May 21st, it was $61.50 per barrel. And now we are trying to slow down at this upper trend line of this Elliott wave channel. So if we can see more weakness here in the short term, which I would not be surprised, because looks like, if I zoom this in, looks like that this is the first leg of a sell-off, and now you have only 3 wave rise. So in the short term, I think that this could cause more weakness here on crude oil, and this, as you know, is supportive for dollar CAD as well.
Mm-hmm. Same for dollar NOK.
Yeah, of course. Also, let's take a look maybe on German DAX. Now here we have still quite, it's doing quite well, we should say, if we respect the correlation with the US stock market. Now the S&P 500 is much lower than NASDAQ 100 as well. But here, I mean, this looks like a very nice potential wedge formation.
Yeah, we have the same thing with the S&P more or less. Why can't this whole construct be part of an expanded flat fourth?
Expand, you mean like that we are going to see a wave C sell-off?
Yes.
Yeah, I mean, of course, that's a very valid point as well. But in both cases, for, let's say, through summer, we could definitely see a slowdown or a pullback. So, I mean, at this stage, it doesn't really matter what kind of a pullback or structure will unfold in the next few weeks, because in both cases, then you expect a reversal, right? Mm-hmm. But yes, you have a valid point there. It definitely could be a wave C of a flat as well, if we consider that bounce from A could be wave B.
A, yes, then B, the recent move higher, and we're missing a C lower than A.
Or back to the wave A point, yes. But in either case, I mean, we can count 5 waves up here from start of the year within this wave 3. So definitely we are expecting some kind of a pullback or slowdown, and summer, it's probably perfect timing for this to unfold. And then when maybe other central banks will do the same talks after summer, we could again see some kind of a volatility, maybe even interesting reactions against the US dollar. Now we can also maybe take a look on cable here. Now I know that cable is also having a very nice dip here, but for me it's very hard to say that the top is in place. I mean, always when I'm looking for a wave 5, it's very rare to see that wave 5 will move to a new high and complete the whole sequence for just a few pips. Okay, so this normally occurs in the middle of consolidations, where market just try to tricks on a breakout for those who want to buy, and maybe clear some stops for those who are on the short side. So I'm afraid that this consolidation is still underway. It could unfold as a flat, it could unfold as a triangle here. And if this is really going to be maybe a triangle, watch out for potential support at 1.38 up to 1.39 level. So I'm not that aggressively bearish here on cable. Maybe just, as I said, for another 100 pips sell off, and then we will see if this support will really be taken out or not. Here we are also at this 100 simply moving average testing with right now. So technically, it's not really a bear market. It's just a range bounded market here since February or January, actually. Do we have any questions, Steve?
Someone's asking about gold, Grega.
Gold.
Yeah,
Yes.
just came in gold. Yeah.
Yeah, I mean, on gold, we were looking for this recovery and was expecting more upside after pullback, but so far this pullback is becoming very aggressive. So for now, still very respected trend line is in place. And if this trend line will be able to hold, then maybe this whole price action can unfold as a triangle here in a wave 4. So we will see how this unfolds, but at the moment, this is a very aggressive fall and definitely too aggressive for my taste to look for any longs here.
Yeah, it's impulsive for the time being, so it definitely has more to go before it's over.
Yes,
I was monitoring the move lower initially within a channel, and once it broke through the channel yesterday, I immediately realized that okay, this has more legs to run. Yeah, that channel, yes, that you're about to draw. Yes, that one.
There was no follow through to the upside, actually.
Yeah. So once I saw this slice through the support, I was like, okay, this has more to run.
Yeah, and I'm afraid to say the same, actually. Okay, actually, I don't have anything else.
Okay, don't worry, I have things for you. How much time do we have? 3 minutes.
You have
do we
2
have
minutes.
You might have more. I'm trying to reach Bryn Kelly and I can't reach her.
We have Bryn Kelly today. Okay, well, that's nice. Okay, let us. So Dale, we go on until you tell us that you found her and she's here. Okay.
Okay, buddy.
Okay. So Grega, first of all, let me summarize what you've said so far. So far, all the instruments you had a look at, you are treating this dollar rebound and the potential risk asset pullback as corrective in nature, right?
Yeah, I still think that this from January, I mean, if you zoom out, you will still see that there is no real change in trend, or at least it's too soon to say that there is.
Absolutely. I'm in agreement with you anyhow. I'm just summarizing for people that are not so familiar.
Yeah, exactly.
I make it very simple for people.
Yeah, but in the short term, I think that there is room for more dollars.
I agree. I believe that in the short term, we're seeing moves unfold in an impulsive manner. So I think that this corrective move will run longer. I don't think it's something that's going to be over today or tomorrow.
Yeah, exactly.
So I think we will see corrective moves, which might finally retrace, a decent part of what we've lately seen. And to be honest, I think it's very nice and healthy. It's going to give us opportunities to join previous trends at much better prices, right? Because during the past 14 months, we've had literally no opportunities to join the trend that made sense having to do with risk reward. Yes. Almost no opportunities.
Yes, exactly. Especially if you look at commodities, not only currency.
Yes. Everything was going literally in a straight line.
Yeah. Exactly.
In that context, do you also have the feeling that, for example, S&P, which so far has had a very limited reaction to what the FX and the commodity world has done, is about to do some catching up? Because we did have a negative day yesterday, but I mean, zooming out a little bit in the chart, you don't even notice it, right?
Yeah, I mean, it looks, for me, it's still a very healthy uptrend here, and I just think that those pullbacks that we have seen, especially on copper and lumber, I believe that I covered this in week ahead video as well. And
you did.
Yeah, and it looks like that this is probably just having some negative it could have some negative impact on stocks in the short term. So I'm looking for this to be wave 4. It could unfold as a flat correction, and it goes very nicely actually with DAX that we covered earlier. Also, if we look here on NASDAQ 100, we can count 5 waves up on this intraday chart. So even this one suggests that we could see some kind of a pullback. So from yesterday, I think that there can be a resumption to even lower levels until we form 3 wave setbacks. The support here on NASDAQ, which in my opinion could be the most interesting on the long side, is at 13,460.
What about, since people do pay attention to them, what about cryptos? Technically speaking, nothing really changed yesterday.
Nothing.
Yeah. Are you also still looking for another leg lower in the crypto universe? Ethereum looks heavier than Bitcoin, but Bitcoin also looks like it might be unfolding in some kind of a
actually I'm tracking 2 wave counts on Bitcoin at the moment. Now the first one is that this is an ABC recovery. Can be even some kind of an ending diagonal here, building for a wave C. And I'm very curious to see what will happen here around 43,000. As you know, there is majority of people who are constantly looking to try to buy the Bitcoin, which is fine, especially from investment perspective after such a nice pullback. But for short-term traders, maybe they are waiting on a breakout. But 43,000, when some are looking or expecting a breakout, well, that's actually a point where I would be very careful, because we still have, after all, this potential 3-wave recovery going on away from this May lows. And what's even more important is that in this first leg, in wave A, there was a 3-wave recovery, not a 5-wave movement. And always when you have a 3-wave drop from a new high within uptrend, or from a new low, a 3-wave rise in a downtrend, well, that's typically the most important substructure that suggests that this is a correction rather than a change in trend. So in my opinion, this whole price action could be a correction.
Is part of a bigger correction.
Yes, so it could be an ABC rally towards 44,000, or if we just will continue to consolidate here, it could be even a triangle if we drop, let's say in the next 24 hours, back towards 36,000.
Yeah, and to be honest, Ethereum looks a lot more like a triangle now that we have enough price action.
Let me take a look.
I like that crypto evidence page that you have set up there, Grega. Shows longs and shorts, and that's interesting.
Yeah, you have a lot of data but you really have to be careful whenever you're looking at this data on TradingView, because cryptos and exchanges can have such a big difference.
Data indeed.
That you really have to check twice before making any conclusion.
Indeed. Yeah. Very true. So yeah, Ethereum looks even heavier than Bitcoin.
I mean, here we clearly had a very strong drop, and notice that now we are just consolidating here, just moving sideways. But keep in mind that that triangle that you mentioned can also be in a wave B.
And so we have a wave C after the triangle and then the next leg lower, yes.
Yeah. So that's why I have labeled this alternate count above here, but really it doesn't make any changes regarding the whole picture. I think that this drop from May highs is just still incomplete, and that we'll see maybe even 1,000 here in July.
Now a thing that I'm going to address in the next webinar in the Morning Edge is following yesterday's move. We've seen a lot of breakdowns in also in sustained uptrends in the yen universe. And when I say in the yen universe, I mean like Euro yen, Pound yen, Aussie yen, Kiwi yen. Any of those that you have your eyes set on?
Yeah, I mean, I'm looking at ASEAN. Let me switch the window real quick here. I'm looking at ASEAN. Here it is. Okay, and we are, I mean, it's definitely a strong uptrend, and I'm afraid that if Aussie dollar will be headed even higher, then ASEAN will probably catch it up as well, because dollar yen could maybe even stay sideways. So here I'm looking for potential wave 4 pullback. There is a very nice support around 83 down to 82 levels, so that whole zone could be potentially a very nice area for a new turn to the upside to complete this wave 4 pullback. So for now, there's still a very strong uptrend.
Yeah, I have to tell you that my basic technical analysis charts and my intuition tell me that perhaps your alternative count that we already saw the 5 above that triangle. I don't know. I've started seeing breakdowns both in the Aussie yen and the Kiwi yen that make me believe that we might have seen the high for now, and we're in need of a deeper correction than just a small pullback there.
Than just 83, 82, you mean? Yeah, I mean, if we break 82, then I'm with you and could even look for something more impulsively and aggressively to the downside. Maybe we can compare the previous correction from the current top.
Yeah, I'm gonna show these charts in the next webinar, but I've started having the feeling that we've started also some type of a bigger corrective move here.
Yeah, I mean, we could say that wave 5 here is in place. Let's say that.
Yeah, that's what I feel. That's what I feel.
Then you watch out for 80, 50, 81 level.
Yeah.
But the reason why I'm looking at 83 is because we had a lot of noise here, the former wave 4, and if you look closely, if you zoom this in, you will actually be able to make an ABC projection here coming out around 83 as well. So that's why I'm saying that this is quite a key level.
Yeah. Somebody says a lot of ifs in Elliott. Yeah, because there are a lot of ifs in the market. But you know what is important for you to know is that once you start learning the rules of Elliott waves, you might have noticed that in the conversation we had with Grega before, in the case of the S&P and the Nasdaq, there are cases that both the ifs point in the same direction. It's just the extent of the move that you're not sure in advance. So there are many cases that both scenarios point in the same direction. So you have a trade in hand with a good risk reward ratio, and you're just not sure if you should initially, if you should look for more conservative or more aggressive targets.
Yeah,
but
the
you readjust
question
that.
is magnitude.
Yeah, exactly. And having to do with that, that's not a problem, because once you start riding a move with a good entry, then it's up to you and your trade management to make sure that if there is bigger magnitude coming, that you don't get yourself completely out of position so you can capture most of it.
I would say that if equals to market confirmation. If I'm bullish on Aussie yen and I want to buy it, I will say, okay, if we get a bounce, then I will wait a pullback and make maybe a trade on the long side. That's why I'm saying if, because I'm not the one who will say where the market will turn. I want market to react from the levels that identify, and then I go with the market.
Also, Elliott waves is extremely useful because it is with its counts, it always shows you the direction of the trend and also the invalidation of a trend, which means that it helps you if you want to be trend trading, which, let's be honest, trend trading is the most profitable way of trading. I mean, oppositely from looking always for reversals, which, you know, can be a very tough game to play, right? It helps you align yourself with the trend, and that's, you know, extremely useful.
Yeah, I mean, also from a trading perspective, now imagine 12 hours back, you know, it was a totally different picture if you ask any. any
Yeah.
technical trader. Now everyone are trying to join the current sentiment and will look for important reversal or significant tops. But that's when we actually should make one step back, and rather than looking at the intraday charts, let's take a look where we are in the big picture, which is still not invalidated in my opinion.
Mm-hmm. Okay. Any news with Bryn,
No,
Dale?
no.
Okay.
Mm-mm.
I'm sure she forgot or something because
Yeah.
she's a very reliable person. I mean, she's
Yeah. I'll see if I could reach her and bring her in tomorrow.
okay. That would be great. So you have the day open for the timing for
Yeah.
tomorrow, right? Okay,
Right.
good. So see if you can get here for tomorrow. It's a nice juncture in time.
Okay.
Guys, gals, any more questions for Gregor since we have him here? Palladium, Gregor, there you go.
Let me just check.
A very big move lower today, 5%. In my opinion, still within the context of a corrective pullback. I don't see anything groundbreaking. Palladium is volatile.
Did we
anyhow.
lose Brianne Kelly today?
Yeah.
Oh, okay.
Just a second, I'm looking for it here in a trading view.
XPD USD.
Yeah. I'm just searching for the wave counts if I have any.
You should, because I think we've discussed it previously.
Stop sharing.
So you probably drew that somewhere. Ah, there you go. You had something.
Yeah. Okay. Let me look. There's some old wave counts. Anyway, let's make a new one here. Okay, looks like that we are now making a reversal after the market accomplished this 5-wave rise. What is probably the most concerning is that here in the middle, it looks like that it was a consolidation. And this consolidation could actually represent wave B of a 3-wave advance to a new high if we consider that current weakness.
So you mean that this whole move higher might be part of a bigger correction that's unfolding since we found the previous high?
It's a little bit early, but let's say 26. If we go down there, yes, I think that there could be a much more lower price action coming then.
Yeah, as an expanded flat with that being a...
Yes. I really don't like this whenever you have this 5-wave movement and then it's an impulsive price action, then we don't see a follow through at a new high. We rather make a pullback.
Counter argument though, for the time being, this pullback is well defined within a channel for the time being.
Yeah. It's not really that kind of a impulsive advance, very strong one away from March lows. It's quite choppy here. So, and this reversal is set from a new high back below the previous high. That's what concerns me a lot. But as I said, as long as we are here above this trend line, there's something.
No. I mean, if you zoom closer to the price action we've had since we topped, so far it channels just fine. I mean, it doesn't show any real, if you zoom closer to the recent price action from where we found the 5th wave high to where we are. Yes.
A rally here above 2,900
is going to be very bullish.
Yeah, that would be a different signal. So that's the confirmation that we discussed earlier. If you think that's an ABC drop, well, you want that market will stop at the current fourth wave area, which is right here.
Yeah. So that's why I haven't really turned bearish yet. You know what I mean? Exactly what you said.
Yeah.
You still long the precious metal complex, Steve?
Well, I own gold. Yes.
Well,
I
I
also
mean,
have gold miners.
Yeah.
And absolutely, yes, absolutely.
Yeah, okay. That didn't change your mind at all. Okay.
Oh, absolutely not.
Okay. I'm just taking your temperature.
How is Blake calling that? Blue light special? That's what he used to call it.
Yeah.
Yeah, I think we're about to get a blue light special in precious metals.
Figures you would use a food metaphor.
Yeah, I mean, prices will still be going up. So if you want to fight that, you need to own gold and silver.
Absolutely.
Yeah.
Anyway, I invited Bryn to check to see if she's okay, and said that we could do it tomorrow if she wants.
Okay. Good.
Okay.
Let's hope she can.
Yeah, I'm sure she'll answer me.
I'm sure she will.
Yeah. So it was great having Grega here. God, it's like, you know, in a way, in some way, it's like it's a little different world in 24 hours, isn't it?
Yeah, exactly.
Yeah, but to be honest, Dale and Grega, we've seen that many times before. Unfortunately, we're seeing that a lot less frequently than we used to, right?
Yeah.
And we know that's why we keep saying you need to keep respecting the trend until you get a very nice reversal. And we're finally getting a very nice reversal. Grega and I seem to both agree that this is a corrective reversal, but still it can run further, right? So there is money to be made being counter trend at the moment, and there's going to be even better money to be made when this counter trend move is over.
You don't see a move to 95 or anything in the Dixie, Grega? Do you think 92?
Yeah, that's not a bad question, Grega. What about upside targets and structure in the DXY as we speak?
And we could wrap it with that.
Yeah. Here we are. Do you see the chart? Yeah.
Yes, mate, we do.
Yeah. Okay. So we have seen a break out of this consolidation here, and looks like that we are now making this 5-wave impulsive advance. So again, we break 91.40 quite aggressively, and I think this could be a very nice support here in the next few sessions once we get a pullback. And that's this upcoming 5th wave could actually be a very nice opportunity, not only again on dollar Swiss pair that I discussed earlier, but also against some other currencies as well. So for now, I think the dollar is making a very nice bullish rise, but it can be maybe just a short one. Keep in mind that this here on a higher degree time frame charts, we are still missing this wave 5.
Yeah,
or
that's
if we're just going to see sideways consolidation, well, then it could even be a triangle. Keep in mind that the rise from this start of January looks more like a corrective rather than a changing trend here. So I think that this is still part of a downtrend.
Okay, answered my question.
Somebody's asking, somebody's saying that they want to learn Elliott waves, and where would they start? Correct me if I'm wrong, Grega. I think there is a free because there is a free PDF they can search for the internet, the Elliott wave principle, key to market behavior from Frost, Pretzer, and who's the third guy?
Yes. Frost and Pretzer, right?
Yes. Yeah. Frost and Prester. Pretzer, sorry. Yeah, CHT. Yeah, Pretzer, I think.
Can you say K in Greece?
K, of course, yeah.
Yeah, okay. Prechter.
Prechter. Okay, so it's Prechter.
There you
okay,
go,
fine.
Buddy. All right.
So it's Frost and Prechter, Elliott wave principle, key to market behavior. I think you can find it and download it for free because it's like rights have expired, at least the first version, and it's not that Elliott waves have really changed or evolved during the years. So download that and read it. It's like 100 and something pages, but a lot of charts in them. So literally, you can read it like within a couple of 2-3 hours. At least I'm a fast reader. So 2-3 hours, and then it's all about reading it again, practicing, opening a chart, and start drawing like waves, and then see if you have violated any of the principles, so on and so forth. Right, Gregor?
Yeah, I mean, whenever someone asks me how to do Elliott wave analysis, I just always say, don't go into details too much. I mean,
start with the basic. Yeah.
But the most important with the Elliott wave is, Elliott wave is not a trading tool. It's just a tool to analyze or view the markets. Okay, so with the Elliott wave, we are just trying to identify the trend. And whenever you have a trend, the Elliott waves helps you to understand if the pullback is corrective or impulsive. And then you know in which stage of a higher degree trend we are. Are we going to resume the uptrend or it was a top? And when you will be able to find the difference between tops and corrections, that's when actually you can take advantage of a market, because you can join this trend.
And also because the market is fractal in nature, so is Elliott waves, meaning that you can actually apply it to any type of time frame you wish.
Yeah, of course, but I always recommend go to the higher time frame. Much easier will be for you.
And in my opinion, Gregor, the exact same thing applies to all types of technical analysis. I think it's an extremely big mistake, just because, for example, you're a day trader, to open like a 2-hour chart and plot some things there, because you lose the idea and the general direction of the market. I think that no matter what type of trader you are, you should always do a top-down analysis. Have a look at what's happening in the weekly, have a look at what's happening in the daily, even if you're a shorter term trader. And don't forget that if you do that, it's not that the weekly chart or the daily chart need readjusting of your analysis every hour, right? I mean, I readjust my drawings on a weekly chart every many days, because a weekly chart unfolds very slowly, right?
Yes,
but
exactly.
It's very important to have a top-down analysis.
Yeah, I mean, it's very important whenever you are, especially whenever you're looking for one particular wave count on a higher degree time frame charts, that you are more flexible and you will have more time actually to adjust your views on a higher degree time frame charts, rather than to get married on with the short-term setups, because you will probably be blown up.
Actually, I found
many times with the intraday spikes that will not actually, as you said yourself, impact the higher degree picture.
I found my Elliott wave booklet. As you see, it's not really thick, right?
Yeah.
Just to give you an idea.
Yeah, look at that.
I mean, you see, it's something you can literally go through in a single day, right? And then just let it digest it a little bit. Then you can reread it. At least this is the way that helps me more. This is how I used to read for exams as well. There are people that when they study for exams, my wife is like that. She likes go through like every page until she learns it by heart almost. I have a different methodology. I like to read through everything. I know at the beginning you keep very little information, and then go through it again and again. And every time you read it, you gain more understanding in what you've read, and you start realizing more in detail as well. But it depends on what type of a person you are, obviously.
Sure.
Okay, so see you all in not all, but those that are Forex Analytics clients in 20 minutes in the morning ads. Thank you very much, Gregor.
Yeah, thank you.
Thanks,
Gregor.
Dale.
And great job, Forex Analytics team, in prepping people for a surprise yesterday. Okay. And also remember, don't just count your waves. Don't just count your triangles, count your blessings. And we'll wrap it up tomorrow for a TGIF session. Good hunting, everybody. I really encourage everyone that's still hearing my voice to subscribe, because a day like yesterday could make your year. Okay. And
Very, very true.
you know what I mean? You could have, I know a lot of people had a good month yesterday. You know what I'm saying?
They did, but keep in mind, Dale, which is also equally important, is that even people that wanted to be conservative and were flat yesterday can make money during the next few days following this volatile move.
That's right. That's right. They didn't play roulette and bet prior, betting on a reaction. And now we have some evidence to move forward with. Right, buddy?
Mm-hmm. Absolutely.
Okay. Okay. So thank you, everyone. Good hunting. Make an investment in your trading career and join today. Forex Analytics, home of people that are both talented and care about you. Adios.
Bye bye, all.
See you, Steve.